You know that money that comes out of your payslip every month? Well, that goes into superannuation, and there's going to be a big shakeup in the superannuation market in the coming months. Vanguard is coming to Australia, and what that means is one of the world's largest investment firms and fund managers is coming into the Australian market. They're going to lower fees and they're going to create more competition here, especially for the industry super funds. In this video, we're going to break down what's happening with Vanguard here in Australia, and I'm also going to share my thoughts because I'm going to be joining Vanguard as an investor and using them for my super going forward. My name's Luke. I talk all things real estate, renovating, and financial freedom. Make sure you drop a like on this video and subscribe down below, and let's dive into today's article. Vanguard Super will officially launch in November this year after APRA last week granted the $11 trillion US behemoth a license as a public offer registrable superannuation entity. An RSE, that's much easier than saying registrable superannuation entity. So basically, Vanguard is coming to Australia this November and they're opening up to the market. Vanguard's long-heralded superannuation plans come 40 years after the firm started in the US 401k retirement savings market and 26 years after first opening its doors in Australia. Its arrival represents a competitive threat to local players and was welcomed by consultants and others not directly competing. Super Ratings Chief Executive Kirby Rappel said Vanguard's emergence should lead to more innovation in the local industry and presented a competitive risk to the incumbents. Now, Vanguard have offered ETF products in the Australian market, and you can buy in these diversified exchange-traded funds through different markets. But Vanguard hasn't played in the superannuation space, and this is going to allow Australians who have super and want to use Vanguard as their superannuation provider to put their money, their hard-earned cash from their day job that's taken every month out of their pay packet and put it towards an exchange-traded fund which is managed by Vanguard. One of the greatest things about Vanguard is the size of their funds. You know, they manage $11 trillion and there's economies of scale there. They've got scale, which means they can reduce the fees across their products. And this is the real reason over the last 25, 26 years, people have used and invested in these exchange traded funds. You can go for growth funds, you can go for conservative funds, you can go for yielding funds. So there's lots of options out there. And this is going to be my strategy for my super to invest in ETFs through Vanguard going forward. The firm's focus on retirement savings is also well-timed as the local industry switches focus from accumulation to retirement and decumulation. Given its mastery of index funds, as we were talking about, its entry into the retail super space is a further push into passive funds management in Australia. Vanguard's financial heft is significant, with assets under management nearly 4 times the assets of the entire Australian superannuation industry and 42 times the size of the local leader Australian super. And this is what I was talking about, that economies of scale that Vanguard really has in terms of having a large amount of assets under their control means that they can maximize the efficiency and reduce the fees for the everyday retail investor. I really sound like a Vanguard advocate here. I'm not sponsored by Vanguard, but I just think their products are amazing, how they can have such scale and you can receive such low fees in return. So let's talk about some of the challenges that Vanguard might have here in the Australian space. They're going to face a number of challenges breaking into the super industry, including distribution, fierce competition from well-entrenched super funds, as well as lack of brand recognition. Now, I have to disagree with the lack of brand recognition. I would say Vanguard is highly recognized, especially among people under the age of 35, because it's been trendy. It's been trendy on YouTube. It's been trendy in general to invest in ETFs. And Vanguard has been the leader of providing those products and allowing people to invest in the market. I think there's going to be a big push, especially from younger investors, to move towards Vanguard's products and to Vanguard Super. So I think they're going to have a dominant effect, and some of the other super funds here in Australia might have to change some of their offerings or some of their fees to be competitive, which is great at the end of the day for the everyday Aussie. Vanguard superhead Michael Lovett is well placed to overcome the distribution hurdle, given his experience both in Australia and the US in distribution, with a focus on the advisor market. A Vanguard veteran, he worked with HSBC and Challenger earlier in his career. While Vanguard is well known in the US market, the firm is not yet a household name in Australia, notwithstanding its lengthy operations. Having won its license this month and 3 years after officially announcing its entry into the market, the firm will spend the next 3 months working through and validating its systems to ensure a flawless start. In past statements, Vanguard's Lovett has not ruled out acquisitions as a way of building its base in Australian super. At a time when APRA is pushing for industry consolidation, Vanguard comes to the table with plenty of financial muscle. Vanguard tried its hand in corporate super earlier with Plum Financial, but sold out to joint venture partner MLC in 2003, in which $65 million of losses were incurred. Vanguard brings a new proposition to the industry with its scale and low-cost index investing. And isn't that the truth of it? That's what's happening in the Australian market around superannuation. The way I see it, you've got two channels to invest your money. You have the superannuation route, which, you pay 15% tax each year, and then all of those gains are potentially tax-free when you retire and withdraw that money. And then you've got to invest in your personal name, which you'll have to pay taxes on if you make income on those products throughout your investing journey. And you also have to pay capital gains when you exit out of potential deals when you invest in your personal name. So the super vehicle here in Australia is similar to the 401k in the US in that it has reduced taxes and it benefits those who get in early and build their base over time. The thing for me is you can't access that super very quickly. I think the age is around 60 or 65 from memory at this point in time. So that's a long way for me. And so that's why I'm investing the bulk of my money in my personal name through property with Emily. And then in superannuation, we're going to go for diversified ETFs. And that's why I really love this Vanguard product. It's low cost. It allows you to access a whole range of ETFs and gives you those options. So I'll probably be looking to max out my super contributions and then also continue to invest in property in my everyday life. I feel like that is the perfect balance for me, where I can push my superannuation funds towards the markets, towards the stock markets, and then I can push my personal investing goals towards the property market. That seems like the best balance in terms of bang for buck and returns that you can manufacture, because the super, in my opinion, is more passive, whereas the property investing for me has been far more active. We look to manufacture value on every deal, negotiate with banks and brokers, and get the deals to come together and build our portfolio over time to create that passive income. So do you think Vanguard is going to have an impact on the superannuation market here in Australia? And are you thinking about joining Vanguard when they launch their super products in around November, December this year? I'd love to hear from you in the comments down below. Let me know what your plans are regarding super, regarding property investment, and your long-term plans going forward. I'd love to have a chat in the comments. Drop a like on this video and subscribe down below. And if you're looking to take your investing journey to the next level, head over to my website and check out my course, Invest with Purpose, where we take you on a step-by-step journey to investing in property and taking you to that next level to grow a multi-million-dollar property portfolio. Otherwise, drop a like on this video, subscribe to the channel down below, and click this video over here for more things real estate, renovating, and financial freedom. I'll see you in the next one. Peace.